For a long time, Brazil looked like the future. A country with enormous land, enormous resources, and a population large enough to become a global economic power. Everything about it suggested growth. Massive cities, expanding industry, natural wealth on a scale few countries could compete with. At one point, people genuinely believed Brazil would become one of the most powerful economies on Earth. Not eventually, soon. Because by the early 2000s, the country appeared unstoppable. Its economy was booming, foreign investment poured into the country, millions of people were rising into the middle class for the first time. And internationally, Brazil was being treated like one of the next great superpowers of the modern world. The optimism became so strong that economists grouped Brazil alongside countries expected to dominate the future global economy. It wasn't just growing. It was supposed to transform the balance of global power itself. And for a while, it genuinely looked possible. But underneath the growth, something else was building. Because countries don't become superpowers through momentum alone. They require stable systems underneath the expansion. And in Brazil's case, many of those systems were far weaker than they appeared on the surface. At first, the warning signs were easy to ignore. Commodity exports were surging, government spending expanded rapidly, growth continued moving fast enough to hide deeper structural problems underneath the economy. But over time, the pressure inside the system began spreading. Corruption became deeply embedded across politics and business. Public debt increased. Economic inequality remained severe despite the appearance of rising prosperity. And slowly, the gap between Brazil's enormous potential and its actual stability started becoming harder to ignore. This is what makes Brazil such an important story economically. Because on paper, the country had almost everything required to succeed. Resources, population, global influence, industrial growth, international investment. Yet despite all of that, the country never fully became what the world expected it to be. And the strange part is, Brazil didn't collapse because of one sudden disaster. The pressure built gradually, through systems that looked strong during expansion, but became far more fragile once growth started slowing down. And over time, the optimism that once surrounded Brazil began changing into something very different. Because once countries begin relying heavily on momentum to sustain confidence, the moment that momentum weakens, everything underneath the surface becomes much harder to hide. At first, Brazil's rise looked completely real. And in many ways, it was. The economy expanded rapidly, poverty rates declined, consumer spending exploded across the country. For millions of Brazilians, life genuinely began improving. That's what made the optimism so powerful. Because Brazil wasn't just growing economically, it was growing psychologically. People believed the country was finally entering a new era of stability and global influence. And internationally, the excitement became even bigger. Foreign investors poured money into Brazilian markets. Global corporations expanded heavily into the country. Commodity demand from China pushed exports even higher. Everything appeared to be accelerating at the same time. And for a while, growth itself became the proof that the system was working. But this is where economic booms often become dangerous. Because rapid expansion can temporarily hide structural weakness underneath the surface. And in Brazil's case, many of those weaknesses never fully disappeared during the years of optimism. They were simply overwhelmed by momentum. This is one of the biggest mistakes countries make during economic expansion. Strong growth creates the feeling that underlying problems matter less than they actually do. As long as money continues flowing, confidence stays high. But once growth slows down, everything underneath the surface becomes much more visible very quickly. And Brazil depended heavily on a very specific type of growth: commodities. Iron ore, oil, agriculture, raw materials exported into the global economy. That created enormous wealth during periods of strong global demand. But it also created dependence. Because economies built heavily around commodity exports become vulnerable to forces outside their control. Global prices change, demand weakens, external markets slow down. And once that happens, growth can reverse far faster than people expect. This is exactly what began happening to Brazil. As global commodity prices weakened, the economy started losing momentum underneath the surface. And suddenly, many of the deeper structural problems that had been hidden during the boom years became impossible to ignore. Corruption scandals exploded across politics and major corporations. Government spending pressures increased. Public debt continued rising. At the same time, productivity growth remained weak compared to the scale of the country's ambitions. And slowly, confidence began changing direction. Because once people stop believing the future will continue improving automatically, the psychology of the economy shifts very quickly. Investment slows. Businesses become cautious. Consumers pull back financially. And countries that once looked unstoppable can suddenly begin looking fragile instead. This is what makes Brazil's story so important historically. Because the country didn't fail due to a lack of potential. In many ways, Brazil had more advantages than most nations on Earth. The problem was that growth alone could not permanently overcome deeper instability underneath the system. And once momentum slowed, the pressure that had been building quietly for years started spreading everywhere at once. That's when Brazil's rise stopped feeling inevitable and started feeling uncertain instead. Because once countries become dependent on expansion to maintain confidence, even a slowdown can begin exposing weaknesses large enough to reshape the future of the entire economy. By the time Brazil's slowdown became obvious to the world, the optimism that once surrounded the country had already started fading. Because economic momentum can change far faster than people expect, especially when confidence itself becomes heavily tied to growth. And in Brazil's case, years of expansion had created expectations that became increasingly difficult to sustain once the economy weakened underneath the surface. This is where the pressure began spreading across every part of the system at once. Growth slowed sharply. Unemployment increased. Public anger intensified as corruption scandals exposed how deeply instability had spread through political and corporate institutions. And suddenly, the country that once symbolized the future of emerging markets began looking far more fragile than anyone expected. Because once confidence begins collapsing inside an economy, the effects rarely stay limited to finance alone. Investment slows. Political instability increases. Businesses become more defensive. Consumers reduce spending. And over time, the entire system starts losing momentum psychologically as well as economically. This is what makes Brazil such an important example historically, because the country never lacked potential. If anything, Brazil may have had too much potential for the world to ignore. That's what made the expectations surrounding it so enormous in the first place. But potential alone is never enough to create lasting economic power. Countries also need stable institutions, long-term productivity growth, political consistency, systems strong enough to survive once expansion inevitably slows down. And that's where Brazil struggled repeatedly over time. Because while growth could temporarily create optimism, it could not permanently solve the deeper instability underneath the surface. This is one of the biggest economic lessons countries repeatedly relearn throughout history. Booms can create the illusion that structural problems matter less than they actually do. As long as growth stays fast enough, weakness becomes easier to hide. But once momentum weakens, everything underneath the system becomes visible very quickly. And for Brazil, that shift fundamentally changed how the world viewed the country. The conversation stopped being about when Brazil would become a global superpower. Instead, it became about why the country never fully reached the future it once seemed destined for. And the strange part is, Brazil's story still isn't really finished. The country remains one of the largest economies on Earth. It still possesses enormous natural wealth. It still holds major geopolitical importance globally. Which means the same question continues following Brazil decades later. How can a country with so many advantages still struggle to fully convert that potential into lasting stability? Because Brazil's story was never simply about economics. It was about momentum, expectations, and the dangerous assumption that growth alone automatically creates long-term strength. But history shows something very different. Countries rarely fail because they lack potential. More often, they fail because the systems underneath that potential were never stable enough to support the future people imagined during the years of optimism. And once confidence begins weakening inside those systems, the gap between what a country could become and what it actually becomes can grow much larger than anyone expected. This is what empire economics is about: understanding the systems behind growth, collapse, and economic power. Not just why countries rise, but why so many struggle to sustain the momentum that once made the future feel inevitable. Because history is filled with nations that looked unstoppable during expansion, right before the pressure underneath them started becoming impossible to ignore.